Hi there and welcome to today's investing video. Today we're going to be asking the question, what is your risk tolerance? Before we get into that, it's a case of working out what is risk tolerance so that you can work out what your personal risk tolerance is. Most often, risk tolerance, in other words, the amount of risk that you can face in an investment, is linked to a time frame, or to how old you are, what your age is at the moment. And risk tolerance means that the degree to which your investment portfolio can survive a market downturn, can survive a market crash. So if you're investing into property and the property bubble bursts and property prices tank, how long can you keep your money in that property investment to be able to wait out the bottom of the investment cycle and wait for the investments to climb? The same with equities investments in the stock market. If the stock market crashes, how much time can you keep your money in the stock market to wait to be able to ride that crash out and start climbing out the other side? But people being caught in property or stock market crashes invariably means that they weren't applying a correct exit strategy and got caught up in the greed of the forever rising stock market, and then the stock market is now suddenly not forever rising anymore and tanks back down and they get caught. As Warren Buffett says from time to time, when the tide goes out, you get to see who's swimming without any swimming costume on. And that's basically saying who's been trading without any real exit strategy and following the exit strategy. So, as I said, it's the amount of time, the ability to be able to face a market downturn and wait for a rebound. So in other words, if you're a year or two away from retirement, you can't really face a market downturn, you can't really face a market crash, in which case you will need to be moving your investments into much lower risk type of investment capital. So you get high risk capital and you get low risk capital, and how you split your investment between the low risk capital. Low risk equals low returns, high risk equals high potential returns and a higher chance of losing all of your investment. So how you split between these two will determine the types of return that you get and into which grouping. So generally the younger that you are, the more you can invest into high risk capital, because you've got a longer time before retirement in order to be able to ride out any downturns, and the closer you are to retirement, the more capital you move out of high risk investments across into low risk investments in order to be able to ride things out. Then lastly, let's have a look at what Warren Buffett's system of fundamentals is. And Warren Buffett's system of fundamentals is simple. He invests into a company, and when the company's stock price goes up, and it was also obviously receiving dividends out of that, so that should he be able to get to a point of he can sell, say, half of the stock, and together with the investments that the dividends that he's received and the sale of half of the stock, he can get all the money back out that he put in. Then the money that he's still got left over in that specific investment is, if you're looking at it as a casino gambling point of view, what he's left with is house money. His money isn't on the table anymore, and because his money is back in his pocket and there's house money on the table, it's way easier to not be caught up into the fear and greed of the investing world, because you're not working with your money and it's easy to keep emotion out of the equation. So that's the things that you need to look at to calculate your personal level of risk tolerance, and once you know your level of risk tolerance, it's way easier to work out what type of investment you need to be investing in. That's it for this time on the Investor Dictionary. Let's get together next time. Subscribe to my channel and stay tuned for all the new content that comes out on a day-to-day, week-to-week basis. Until we meet up next time for another piece of investing news or investor terminology explained, stay safe out there, and I'll see you then. Cheers.